Nasdaq currently got a change in the state of delivery on the 4 hour. So what we will be anticipating is price to come lower into these gaps, possibly down into 939 as a first target on the day. We are in this. I don't anticipate this gap to be a reason for price to hold. So I want to see something lower. Then I want to see price lower inside of this gap. So we have this 4 hour change in the state of delivery. I want to see this candle close below the low of previous candles by the end of. So I want to see 7 o'clock it below 176. We possibly might get some retracement from New York session after the opening bell. I want to see price coming down into this black line though. Make its way down into this black line. All right, so unfortunately, my mic did not pick up the recording from the live session. So although I did get the recording, what I'm just going to do is do a voiceover walking you through my process, walking you through some of the things that I did right, some of the things that I did wrong, and how ultimately being able to trust the bias and the overall direction of the market today ultimately led me to having a very good trading day. So right now we are at the opening bell here. It is my anticipation again that my pre-market analysis, I wanted price to trade up into that red shaded area on the right side chart around 229, 255 to like 29, 270. You see on the left chart, although my order is live, it's moving with the price. You see that my potential buy stop order, that yellow box, was where I was anticipating to place my stop loss once price did trade into that shaded area. So I was just waiting for price to come up there. I'm going to the higher time frame. I see this move happening. I'm also still watching, and I think I enter here when the market trades up into that that order block of what I anticipated or what I assumed was an order block. It's interesting. This was a bad entry because one, it wasn't the predefined level that I wanted to see price into. This is just price action here, reading it on a 15-second chart while looking at, the right side of the chart and noticing that it is bearish, but really still no higher premium, especially no manipulation be above those highs, above market highs, which is what I was looking for, anticipating the manipulation move to happen first, which would have been above those highs into that red shaded area. And now, as you can see, price is now starting to shift higher. I think that what I should have been noticing that this was an accumulation of sell side liquidity to trade higher into buy side. You'll see that the market, and you'll also notice that the market did not take me out where it was supposed to. For some reason, my orders didn't trigger, my buy stop orders didn't fill, and so now I'm in this trade, and I'm anticipating to close the position because it's more than what I would have wanted to lose on that trade. Ultimately, what we will see is price will trade into the previous day's open and that new week opening gap, which is also the weekly open. You see, I'm changing time frames for 15 minutes. I'm looking at this bullish candle. I'm anticipating we've already had one trade into that lower gap down there. It just did not scream bullishness to me. We also, price would have needed to trade above this high here. Once this market on the left, we're getting a swing that is forming. It would have had to have been a swing and a trade above there in order for me to anticipate price going to previous day's high, because although the structure did shift in bullish, it just shifted back into the range, which I had already accounted for, higher time frame. And so now I'm just waiting for price to start showing some willingness to trade lower. At this point, I'm looking, I see that drop there, It's there that I add three more to the contract, knowing that, okay, I think that we have our market structure shift here. It's here that we get priced back higher. So I had to sit through some drawdown in this trade at different moments. And ultimately, me having um, trust in where the market was going was what gave me the confidence to hold the trades. But I have to be transparent and also say that this isn't a way that I would trade. I would choose to trade again. Number one, I was over leveraged. For one, I had way too much. I added too much on the trade initially without allowing for it to prove to me that it was still bearish. So that was like the first thing that I did wrong. Um, the second thing was I scaled in and still didn't have that strong um, uh, confirmation from the market that it was shifting lower. I didn't wait for my initial entry or initial point of area or interest that I would have wanted to enter. Here you can see I added 15 more. Fairly confident. This is me loading up on this trade, knowing that we've got all that we wanted to see, and this is something that I also want to get better at is loading up on the trade. This is how you see the big wins, the scale in. Being able to scale in at the right time is everything in trading. So here, taking a partial of 5 micros off there, and at this point, I'm looking to the right side of the chart, and I am seeing that we are close to that daily fair value gap level and also that black line that I had outlined. I was anticipating the draw on liquidity being. So it's at that point I take off 5 more contracts, and now I am going break even on this trade. Reason why I put my stop loss at that area is because I wanted my stop loss is at this area because I wanted that gap at the top to act as a breakaway gap just above it. I didn't want to see price trade into that gap, and if it did, I didn't want to be in this trade anymore at that time. Looking back, I see now that I should have kept my stop loss above those highs, just to allow for my trade to still have the room to breathe. Would have still been in this trade. Here I'm anticipating taking off 2. You'll see me. I'll say is at this point I realized I would take off 2 contracts. It price did get to that 72, the opening or the top. It is here I place 2 more on a buy limit to further scale off the profit. That 29.072 level is the top of that fair value gap. It is here that I say that I would have wanted price to hold. Or even allowing for price to trade above that high there. Ultimately, I'm still looking at this structure on the right chart, anticipating that this could also just be a run below sell side liquidity to take the market higher, which it did yesterday. So I'm just eyeing and considering what structure could be doing right now, because at the end of the day, we are still in a bullish market, and so price could easily just stop plenty below CPI lows and started to run higher. But so here you will see me get stopped out on this trade. Price does trade back into this area, back into the opening price. Because at that point, I know that my stop is going to get hit, so I just close the trade myself. Could have did that a long time ago, but it's here that I see price start to shift structure. I'm anticipating for the low to be formed here. I'm looking at the 1 minute chart on the right chart and seeing some reaction away from this high fair value gap. This is a deep premium inside of this move lower, and so I enter back two more, anticipating that we are going back below those lows. And again, the draw on liquidity is still the fair value gap, and so I'm here trying to see if I can get that another entry into that area. Ultimately, I move my stop loss above there. I think this is another trade. No, the scale in was a little too aggressive. Price not proven to me on the 1 minute time frame, letting it shift the structure. Wasn't no real clear indication that was what was happening. I closed the trade. My idea is that this is a stop hunt. This last high will be the last high in the build up into premium, and so now I'm looking for one more try at this. You see me there take another shot after once I see price has traded back below that low and that fair value gap that I would have anticipated price to be held at. I now believe that this high that is priced in is this shift to take price lower. You'll see me adding more to this trade. I'm also, what you can't see is that at this time, I'm also noticing that ES has not taken its previous day's low, which is also a draw on liquidity. That is strengthening my idea that price is bearish at least until ES takes that low. And so with also Dow being heavily bearish at this time as well. So all these things are coupled into what factored into my ultimately believing that price was going to go lower and continue to try to take shorts when I had gotten that win from earlier. This is something that I want to do more of, which is scale into my trades and really get in the habit of, loading up on trades that I have strong faith in or have strong confidence in based on analysis. So here you see I'm heavy 35 contracts. This is the equivalent of 3.5 minis, and I really have a lot of confidence in this trade that we are coming lower. So this is what you see me here. You see me also reduce my risk as the price action on the right side of the chart is showing me that we will not be coming back to that area. If we do, we are not bearish. And these are the type of trades that allow you to be so heavy into a position and still be relatively risking not that much because the stop loss is so tight. And my faith is so strong in this trade at this point that I am going to continue to hold this trade. At this point, I'm probably and it's here that you'll see me close when we get that run back below that low.